All right, guys, we are live. I am back. I took a little bit of a break. My YouTube coaches are telling me, don't do these live videos. They're not great for YouTube and metrics. But guys, here's what I'm going to say. First off, I enjoy giving you guys information about the Denver real estate market that you can take and actually use when you go to buy or sell a home. Now, of course, I would love to earn your business. All my contact information is below. But really, guys, this is to empower you by knowing not only what's going on in the Denver real estate market, but also articulate it in a way that you guys understand that you can use when you're buying, selling, or investing. You guys are in a position of power of knowing what's going on in the market. So today's video, we are going to go in a direction that we haven't really done yet before. First off, we're going to talk about everything that happened in July. I'm going to weigh that against what I'm seeing boots on the ground in July. Did I say that twice? We're going to review everything in June. I'm going to tell you what's happening actually boots on the ground in July. Guys, this is one of my biggest months ever. I've got buyers buying, I've got sellers selling. And so you guys are going to hear it straight from the insider viewpoint of what's actually happening in the market. And so we're going to review this report together. Megan Aller, big shout out to her. She is the stats queen of Denver, Colorado real estate. She knows everything you need to know when it comes to stats about the market and does a really, really, really good job breaking it down in a way that you can understand. So I'm going to do you guys a favor in sharing her report with you. I'm going to break down my take on it. And then at the end, we're going to get into what I think will be much, not more fun, but a bunch of fun, because I'm going to break down the market. We're going to look at the graphs, and I'm going to actually get into like, hey, here's what I'm seeing. Here's what happened with a buyer. Here's what happened with a seller. So be sure to stay tuned and let's dive into this, guys. First things first, we are going to go to the attached single family real estate market overview for June 2025. Okay. We'll start right here. So inventory for attached home increased month over month and remained significantly higher than this time last year. New listings declined slightly from May, but are still well above last year's levels, indicating that sellers are continuing to test the market. Guys, if we see a bloated inventory, which we've had for quite some time, especially this year, but even going back into last year, that creates a much slower market. And so with us having bloated inventory, you've got an increase month over month for actual homes that are for sale. We like to see that new listings decline slightly. And selfishly, I hope that continues to decline because we could use a little bit of balancing act here. Pending transactions dipped compared to previous month, but still had steady year over year, showing signs of stable demand. That's good, but demand's not in any way, shape, or form keeping up with the pace of inventory. So again, that's why we want to see less listings coming on the market. Closed transactions followed a similar pattern with minimal change month over month and a modest increase from last year. So guys, buyers are still buying homes. Months of inventory rose slightly, reflecting a seasonal cooling trend. The predictive supply indicator also suggests a lower pace ahead. Buyers remain cautious and selective, often waiting for the right fit and favorable terms. Prices continue to show strength, with both average and medium close prices increasing month over month and year over year. This reflects a resilient market even as activity moderates. I have something to say about that, guys. Stick around. I actually disagree. How can you disagree with stats, Pat? Like, this is actual factual information. Yes. I get that. And I told you, I'm going to give you a perspective of boots on the ground. All right. A growing share of homes sold below asking price. Maybe she beat me to this. Guys, look, one of the things I like to do on this channel is review this with you. I don't read this and prepare a narrative and figure all this stuff out, what I'm going to say before the video. Very rarely will I skim through it before. This is real, raw information coming to you live as I am receiving it as well. So I didn't read this, all right, before I shared it with you. A growing share of homes sold below asking price, signaling that sellers are becoming more flexible to get deals done. Concessions were common, though due to recent MLS reporting, it's unclear how those concessions were applied. Based on lender feedback, most are likely going towards rate buydowns and closing costs, with a preference for permanent solutions. When she says concessions here, guys, she's meaning seller is giving a buyer a concession, giving buyer money, paying buyers closing costs, and usually that is being put towards buyers closing costs, the cost of closing on a home and in funding through lending, and or buying down the rate. Days on market increased slightly, meaning the days it takes a home to go under contract and sell is increased, though the median time to contract remained relatively quick. That's good. A notable portion of homes still went under contract within the first week, showing that well-positioned properties continue to move fast. Showing activity declined from May, but still remains higher than last year. That's a good sign. We've got buyers out there looking with steady engagement across listings. All right, let's get back to this. Prices continue to show strength with both average and medium close prices increasing month over month. Here's my here's my take. Okay. I have personally ran comparable properties for sellers. Patrick, we want to sell our home. Here's what we're thinking, but we don't know what's happening in the market. I'm like, cool, I got you. Let me do a home analysis to see if this even makes sense because you bought in 2021, 2022. So like, I have a hunch that it's likely your house isn't going to sell for what you need it to for it to make sense to move. And so when I see that pricing, it shows strength, right, in this article. And again, this is not wrong. There's clearly stats looked at some way, somehow, shape, or form that supports this. But what I'm seeing boots on the ground is most attached inventory, townhomes, condos, multifamily, duplexes, quadplexes, etc. Most of attached inventory, guys, has fallen in price. In some cases, quite significantly. If you're in a little pocket neighborhood, maybe that's not the case. Maybe your pricing is strong. But guys, like my guess is strong in this context, like means it's not falling. Maybe it's stable. But the reality is, guys, I have multiple examples, but I have one on the top of my mind where, the seller bought it for $370 and the community is worth like $350, $340 now. So you want the truth of what's happening? That's the truth. I have a condo that, a townhome / condo that I sold in Littleton about a year and a half ago. I believe it was March of 2024. That was the highest sold townhouse in that community year to date, right? So like that was a year and a half ago and no other townhome is being able to sell at that price. So what is that telling me? What is that telling you guys? Yeah, that pricing, maybe. I don't know where. I have to talk to Megan. Again, she's pulling stats. This is accurate information, but the reality is, I think for most, that townhome, condo, attached inventory is actually struggling a little bit here in price. And in many areas, it's actually fallen. So with that said, let's jump over to detached single-family houses. So this is single-family houses. It's not a townhome, not a condo. It's your own property, your own property lines. That's the market we're reviewing. Now, let me make sure we bring that to the screen, and let's do this. Hey, guys, look, one kind of interruption here. I looked through stats. My YouTube coach just said, don't do these live videos anymore, but I was looking through stats, and guys, I have about 50 to 60 of you that consistently watch these market updates. And so I'm doing this for you. Please do me a big favor. Like and subscribe to the channel. It helps more than you know. And throw in some comments. If you're here and finding value, I want to hear it from you guys and see it from you guys. Otherwise, it might make sense to only do one of these a month. But to be quite frank, I love doing them, especially if they are of value to you guys. Now, with that, let's dive into our detached single family. Active inventory increased month over month. Active inventory is homes for sale on the market currently, and it's significantly higher than the same time last year. Sellers are increasingly aware that the prime listing window runs from late February through mid-April, with inventory typically peaking in early fall. New listings declined from previous months, but remained well above last year's levels. I told you guys, I'm going to look at June's market here with you and weigh that against what we're seeing in July. And I will tell you, over the last couple of weeks, we've seen inventory decrease month over month, which is actually, from my perspective, a positive sign. And it actually goes against what is being shown here in regard to June's trends. And so we're seeing a little break of inventory, which also breaks seasonal trends. Currently, you tend to see inventory rise, but that's not quite the case. And there's reasons for that we may or may not get into here shortly. So stick along with me. Let's keep going. Pending transactions dipped slightly compared to May, but year over year numbers held slightly. Okay, so pending transactions. So that's buyers putting houses under contract. It dipped a little bit, but overall remains steady, which is good. That I concur. An encouraging sign of consistent demand. Sure. Closed transactions followed a similar pattern, remaining flat month over month while showing a healthy increase compared to last year. Awesome. We need that. Months of inventory rose slightly, reflecting a seasonal slowdown that typically follows Independence Day. The predictive supply indicator also suggests cooling trend. Buyers remain selective, often waiting for homes that meet all their criteria and where sellers are open to negotiating. Guys, that is a fact. This market, buyers are just picky, and they have a right to be. Let's be real. Like, you guys, buyers got destroyed in 2020 and 2021. Like, you deserve to be picky. Okay. You deserve to take your time and actually go shopping and make an educated, well-informed, well thought, well digested decision. And that's what's happening in today's market. So kudos and good for you, buyers. But it is definitely impacting the market in a way that there is a little bit of a slowdown. And that's why buyers are taking their time. Prices showed resilience with both average and medium closed prices increasing month over month, year over year. This reflects continued strength in the market. God, like, do we got to go through this again? I will with you guys. I'll tell you what I'm seeing, boots on the ground. Stick along with me. But I disagree again. A growing share of homes. Actually, let me clarify that. I don't disagree. Prices are showing resilience from my perspective in a way that they're not falling drastically. But we are absolutely seeing prices retract. We are absolutely, from my perspective, from what I've seen, from the home analysis that I've prepared, we are absolutely seeing a negative price trend. So I'm going to need to dig into this data a little bit more, but nonetheless, let's keep going. A growing share of homes sold below asking price, right? Indicating that sellers are more flexible in negotiations. Concessions were more common, though due to recent, she put the same stuff. So same stuff here for a detached. Days on market begins to climb, though the medium time to contract shortened. These are healthy indicators showing that buyers are taking time to make informed decisions. Notably, a significant portion of homes went under contract in a week or less. Great homes are still moving quick. Guys, I will be the first to tell you, I guess she was the first. Guys, great homes will sell in any market. If you prepare well and you price accurately relative to the condition of your home, you will do well in this market. But if you just miss the mark, you're going to be one of many that sit and fall down the slope of price reduction after price reduction. Guys, buyers are picky, and they deserve to be. They went from a market where, you had to gut the whole thing and they were paying $30,000 over. They are sick and tired of it. They want a house where they don't have to go put tens and thousands of dollars into it. They want a move-in ready home. And the reality is they have that option because inventory is the way it is. Now, with that, if you guys have any questions, throw them in the chat. I am here for you and want to support your guys' concerns and curiosities. As I wait to see if we get questions, next thing we're going to do is we're going to look at the charts together, and I'm going to share some real life boots on the ground stories with you in relation to what we're seeing in regard to some of the stats here. So let's do this. I'm pulling it up now so that you guys can look with me, and I'm going to share my screen here. Bada bing, bada boom. Guys, as much as I love doing these videos, there's nothing I love actually serving you. In fact, guys, I have a client right now that actually reached out to me on these YouTube videos to ask about the market, selling their home. I've got it under contract. And so it's a real thing where you guys as my audience, my people are reaching out to me, asking for my help in serving you guys from the buying perspective, from the selling perspective, and we are out there winning with our clients. So be sure to find my contact information down below, and I'd love to serve you personally. Now, let's get into stats. So average sales price per week. Now, guys, if you've been rocking with me, you know this chart right here is very deceiving, okay? Here's the thing. I'm going to give you guys a secret here that you can't unsee, okay? That you can't unhear. When you understand this, you're going to start looking at everything differently. Here's what I mean. When you look at this chart, this 2025, this kind of brownish line, you can see average sales price per week in the greater Denver metro. So in Denver metro, if you don't live here, we've got 7 major zip codes and counties. I'm sorry, not zip codes, counties. And that's what we're pulling data from, the greater Denver metro. It's a really big data set. It gives us really, really well dialed in information. However, here's the problem. While this shows that average sales price per week is fairly resilient, meaning it's a little above / at the same price as 2024 and 2023. The reality, guys, is you have to look at average price per square foot. Think of this. If you have these bigger homes selling, it's going to drive all of the data up, and it's going to look exactly like it does here, showing you that, oh, pricing overall is actually pretty resilient. But the reality is that's not the case. What you're seeing here is bigger homes that are higher priced are driving up the data set altogether, giving you this facade that pricing is actually resilient, when the reality is it's not actually true. If we take out some of those bigger listings, the higher price per or higher square foot, higher price, that would draw down the average price quite a bit. Let's see if we have a graph for that so I can show you more accurately. But I just want you guys to understand that this and some of the data sets may tell one story, but it's important to get on these types of these types of channels where I'm reporting to you guys live so you understand what's actually happening. Let me give you an example. I have a seller who bought in 2021, and it's unfortunate, but it's just the reality of the market where they bought the house. The market had actually decreased from the peak, and pricing was actually down about 5%. Okay. So they were in a situation where we have to look at price and say, oh, okay, we bought here, the market's here. Like, what are we going to have to do? And, those are sometimes hard conversations. And so I want you guys to know that, like, whatever you're seeing here is not quite the full story. Okay. Now let's look at new listing counts. Ooh, goodness gracious. Either our data is off or this is absolutely beautiful. You could see 2025, week 28, week 29, we took a nosedive in new listings count. There is an issue here. It was not negative 469. I'm sorry. Growth was 460. Actually, no. I'm sorry. This is correct. New listing count, 413 listings. So you could see a downtrend in here in regard to new listings coming to the market. That is excellent. From my perspective, I love to see it, and here's why. You could see bloated inventory right here. You see this gap? This gap is the actual inventory week by week in 2025, 2024, 23, 21, 22. Nonetheless, you see this gap. We have that many more homes for sale in 2025 than we did in 2024. And what that's creating is the negative price curve. But what we're seeing here, guys, is inventory is decreasing come in July. Why I like that is it's going to balance out the market more. It's less likely to lead to any type of crash. For a crash to happen, you guys need a shock to supply. All of a sudden, think of this. You've got one person in line at the store waiting to buy the limited edition, whatever it is. And there's only one limited edition, right? Well, imagine if that one limited edition turned into 100 limited editions and we had one buyer. Like, they would have to significantly decrease the price of that limited edition item to appeal to more buyers, right? On the flip side, what was happening in 2020 is we had one limited edition and 100 buyers wanting to buy it, right? So that one limited edition, what happened with the price? Absolutely skyrocketed. You want to see how that looks? Actually, watch, check this out. Here we go. Weekly price. Okay, 2020. We had one limited edition. All of a sudden, we had 100 buyers. This is the price in 2021. You guys see how big of increase? From week 23 in 2020, it was $474,000. The average price for a home in Colorado. Guys, that was 5 years ago. And in 1 year, did I get my weeks right? 23. We had a about $150,000 price jump. Absolutely absurd. But that's what's happening, guys. So I hope you understand the inventory, supply, and demand ratios. We like to see this new listing count coming down because with this huge oversupply, it's not even oversupply to be quite frank, but relative to buyer demand, this was putting a lot of downward pressure on prices. And because we're seeing this downward trend of inventory, we should see that balance out. There be a little bit of a softer landing, if you will. And so I really, really like to see that. All right, let's get into under contract per week. We've got our brown line here. Yeah, we're pacing. We're pacing a little bit low the activity in 2020, 2021, 2020 to be expected. Those markets were absolutely insane. But the good thing is we've got healthy buyer demand similar to 23 and 24. I love it. Listing days on contract. Here's what I don't love, at least for my sellers. You see this gap in here? That's how much higher. That's how much longer it's taking homes to sell. So we've got 50 days on market right here, week 29, as opposed to last year is 34 days. So sellers, you are feeling every bit of that delay, right? You just are. And there's definitely some different ways we can expedite this. But that's a whole different conversation. Guys, I want to show you one more chart here real quick. Let's see if I can find it, if we have it. Actually, I'm going to show you two charts. You guys ready for this? Final price versus sold price. Let's see. Sold price versus original price. 67% of properties sold below their original listing price. 67%. Okay, guys? If 67% of homes are selling below their original price, does this chart make sense anymore? No, absolutely not, right? Just saying. There's more to this, guys. Okay, there really is. I could spend an hour or 2 or 3 on this with you. We're not going to do that, but I think I'm painting a fairly clear picture for you guys. I was going to see if I had this square footage price, but I'm not seeing it. Let me check one more area and then we're going to bounce. If you guys have any questions, throw them in the chat. I hope you guys are enjoying this. Please share some love. If this is interesting to you guys, throw a like, throw a subscribe, throw some comments. I need to know because my YouTube coaches are saying, get rid of this. Don't do the lives. They don't last well. They don't age well because I'm doing one every single week. So last week's is no longer kind of relevant. But I'm going to do these all day long if you guys are finding value in them. So be sure to show me some love if you guys are finding value in this. Let's see. Days on market by square footage, above ground square foot. I can't find it. I'm going to do my best in the coming updates to show you guys the average price per square foot and to give you some more clarity on what's actually happening to prices. The other thing I'd like to do is I'd really, really like to do an update in regard to foreclosures and short sales because they are back. We are seeing them. It's real. It's happening in this market. I'll explain why in that video. But I just want to give you guys kind of a glimpse as to what I plan to prepare and show you guys so that we can ultimately set you guys up for success when it comes to buying, selling, or investing here in Colorado. So with that, guys, I've been in the business 10 years. I love doing what I do. I enjoy the YouTube videos, but seriously, I love nothing more than you guys reaching out and saying, Pat, I've got a question. Here's what's happening. Here's what I'm thinking. What do you think? What are you seeing in my market? What's different about Brighton or Highlands Ranch or Parker or Littleton or Boulder? And how should I think about the market? And what do I need to do in order to sell quickly for the most amount of money? Or what are the best opportunities to buy? Guys, I got you covered. My contact information is down below. Please call. Don't hesitate to pick up the phone. No obligation. I'm here to just serve you guys. Of course, I would love to earn your business, would work with you, but ultimately, if I can set you up for success, that's what we're here for. Thank you guys so much for joining. Again, throw a like on this video, subscribe, send down a comment. Thank you guys for joining. And if you guys don't have any other questions, I'm out. It's getting late. The brain is starting to turn off. I always love doing these. Again, thank you guys so much for joining. I appreciate all your guys' support and love. And with that, guys, that is it. We'll see you guys next week. My plan is to keep these weekly videos going, especially if viewership continues. We're building an incredible audience here. You guys want to be a part of this, especially if you're curious about selling, buying, or investing. This is the channel you want to subscribe to. This is the type of insight you need to set yourself up for success. With that, guys, I am out. Thank you for joining. Cheers.